Welcome to Driving Innovation in Retail Banking, which is the first of a series of retail roundtables hosted by the banker and emphasis with Finacle. This first one, Driving Innovation in Retail Banking, will focus on a number of aspects concerning innovation. And in order to kick off the general conversation, I want to introduce everybody, or allow yourselves to introduce yourselves. So we'll go around the table, and what I'd like to introduce yourself and your title, and also mention what you believe are 2 or 3 key factors that will be driving innovation in retail banking over the coming years. And I'll pass to my left.
Sure. Thank you very much, Steve. And good morning, everybody. My name is Amit Dua, and I look after the EMEA business for Finacle, which is the banking solution of Infosys. And I think it's very appropriate that we all discuss this topic at this juncture, thanks to the midsummer credit crunch. I think it's going to be impossible for banks to sustain the kind of operating income level they have for all these years without some kind of innovation in place now. And at least my belief is that there are a lot of factors which are driving these, and amongst the topmost ones are, one, the customer expectation. I think today's customer is more savvy, more nimble, more choosy than ever before. And this cuts across the age spectrum. It's not just the young net savvy customer, but across. And therefore, if you have to service customer demands, you've got to be offering various varieties of products across channels. So, clearly customer demand is one top factor. The second, of course, is the fact that, non-banking players are coming in thicker and faster. You have Tesco Finance, you have PayPal, which is already built up over $1 billion in assets. You have, Amazon and so many other NBFCs coming in and giving the old world a competition and a run for their money. And we have a few examples which I'm sure we'll all share with each other down the discussion. And of course, the whole ubiquity of technology. Today more than ever before, customers are expecting variety of technology and using variety of technology to be able to bank with their own banks, be it mobile phones, and you talk about P2P payments, which have taken up in something like Kenya and many more developing and emerging economies. For various reasons, we understand, and safety and security of not handling the cash being one of them, and so on and so forth. So, if I was to sort of summarize, in my opinion, customer demand, the entrance of new players in the banking space, and the ubiquity of technology. All of these reasons, in the context of the pressures that banks are facing in today's economic environment, is the reason that the banks need to innovate.
Thank you.
Good morning. My name is Sandeep Chauhan. I'm the Global Head of Technology Application Delivery at Barclays. Talking about innovation, sitting inside the bank and looking at technology as the enabler to drive the growth for the business, 3 things come to mind. First, innovation in addressing mobility is going to be extremely important from the customer's point of view, to try and give them the independence of reach to banking services anytime, anywhere, through any device, exactly to Amit's point. And also to look at the advent of technology like cloud computing showing up. It will change the landscape of how consumers in retail banking leverage technology for services. The second is innovation from the bank's point of view is to provide faster fulfillment of banking services. So concepts like straight-through processing and providing a shorter time to market and a far more enriching customer experience, the banks are striving for that and looking at innovation and technology in that space. And third is, as the world is shrinking, providing these services to the customers who are now a global customer as against a local or a regional customer. So customers are demanding services across geographies and being able to not just move money, but be able to get access to products, innovative products in various markets is where there's going to be a lot of focus and need for innovation. So those are the three areas that I think we need to be focusing on. Barclays is clearly very well focused on them and is looking to try and make progress on all three fronts.
Thank you, Sandy. Thank you.
Eric?
Morning, my name's Eric Lindahl. I'm the Executive Director of Retail Banking at the British Bankers Association, having spent some 20-odd years in the retail banking industry. I think a couple of particular points that I'd like to see drawn out during the course of the conversation. I think they very much build on what we've already heard before. First, I think the impact of social change. When I started in the industry 20-odd years ago, banking was very much a supply-side industry. And by that, what I mean is we had a suite of products that we delivered to customers who were dutifully grateful for the products we delivered to them. And that, frankly, doesn't wash any longer. It's all about identifying a customer need and how we deliver on that customer need. So the world has changed in that sense. And I'd also like to explore a little about the opportunity cost that we see in the incessant tide of legal and regulatory intervention as well. It's something of a break. The finest brains aren't necessarily working on the innovative new product design. Perhaps they're rather concentrating on the compliance and the legal function. And have we got that balance right? Because in the final analysis, if all we're really doing is protecting the consumers and actually prohibiting them from gaining access to some of the innovations that could be available to them, we're probably in effect, creating a long-run disadvantage for the consumer. So that, I think, is another point that I'd like to draw out. And I think during the course of the conversation, we mustn't lose sight, perhaps, of the economic environment. I wouldn't suggest necessarily that it's perhaps the global or macroeconomic environment, but rather it's perhaps more about a household economic environment whereby we have seen very substantial increases in the three major heads of expenditure: food costs, fuel costs, housing costs, not just mortgages but council tax as well, and relatively stable wage settlements at about 3-4%. And if that continues over a period, the propensity for consumers to spend might well be restricted. And what effect that might have on investment in new technologies and innovation? I think that's quite an important component for the debate as well.
Thank you, Eric. Thank you. Now, I'd like to introduce our technology editor, Michelle Price, who has clear views on these topics.
The key thing for me, and it's something that I've identified in the sort of the trends that I've been writing about, is, and I think Amit, sort of, you touched on it before, but I think the next logical extension of your argument is that it's about personalisation. So you said sort of identifying customers' needs. It's about being able to see every customer as an individual and to be able to offer them a platform or offer them a service that is just for them. And I think if you look at the way things have gone in consumer technology, for example, the iPod is all about allowing the user, the consumer, to have a completely personalised list of music. And I think the same goes for a lot of services. It is about personalisation and about integrating different services to provide a completely unique experience for the user. And I think it's something that the banking industry has yet to really achieve. And I think that will be a major future consideration going forward.
Thank you, Michelle. Deepak, over to you.
Hi, I'm Deepak Verghese from ICICI Bank UK PLC. And one of the key things that, as a group, that I would like to, hear more about as a focus of the discussion is how innovation is embedded in an organization. what we've heard until now are various elements which drives innovation or organizations to innovate, to be up there in the marketplace and to move on. And these are tools that we use to innovate. To explain further, I'd like to take a step back and probably move to the 1750s, 1800s, where Indochina, and this has nothing to do with banking, Indochina had 25% of manufacturing. And with the coming of the steam engine, and the coming of the steam engine was the market forcing geographies to innovate, which moved change from the east into the west. And you see organizations like GE, which originated from a light bulb and moved on to become a large corporation, where innovation was embedded in the DNA of an organization. The ability to sense markets, the ability to sense change, to use that in the culture of innovation within the organization, and to put that out as successful products which we eventually see. And one of the examples, as you said, Michelle, is iPod. The ability to sense change, to take it back, to get a cogent organization to move that on. And the key is it's changing markets there again. And we spoke about subprime, but the impacts that we are seeing in the marketplace is at a tangent. It probably is originated from place A, but the impact is being felt on each one of us. And the key is, what do organizations do to embed this in the culture of an organization?
Thank you very much. Simon.
Hi, I'm Simon Carter. I'm the Director of Business Systems Strategy for the Cooperative Financial Services. I think innovation has to be driven from customer demand. I mean, if it isn't, frankly, the investment in it's going to be wasted, so it's got to be absolutely focused on the customer. And for me, in the financial services space, I think one of the drivers in terms of how to innovate is going to come from learning from other markets, so learning from retail, in particular from retail, think about the level of understanding they have of their customers. I remember hearing somebody from Tesco's marketing function talking, and they were saying that they were asked the question, actually, well, how finely do you segment your customer base? And they said, well, if you don't have well in excess of 30 segments, really you're not even getting close. So, you know, it's taking the opportunity of getting the level of understanding that these guys do of their customers, and then applying that to, well, what do these customers want that's going to be a big driver for innovation. I think the other one is around technology, and it's kind of linked. There's a couple of aspects to this for myself. One of them is customers are now using technology to be extremely selective about who they use. They're no longer just invest with their or get their mortgage from their bank or their local building society. They go online and they choose from any number of organisations, which means that you get the disruptive influences of newcomers into the UK market who can come in with very low cost income ratios and can compete very well in certain niche markets, and customers are quite prepared to go with these guys. So technology is doing that. Technology is also driving customer demand in terms of how they get their services.
Right, thank you, Simon. And for our last speaker, George.
Thank you. My name is George Gorshkov, and I'm managing director of a retail business with a Russian bank called VTB24. And quite honestly, I find myself in a fairly interesting situation because there have been a lot of words said about changing markets and changing IT. Well, I come from a rapidly changing market, and a market which has a unique chance to leapfrog from some of the dated technology in banking right to the sort of to the employment of cutting-edge technologies, technologies that Western banks really starting to implement in their operation. On the other side, Russia is a huge market with about 140 million consumers and 11 time zones. So it's a big territory. But otherwise, to me, today innovation, as everything in banking, is a balancing act. On one hand, we have to capture the consumer, and we have to have an in-depth understanding of his needs, desires. And you talked about 30 segments. Well, the aim that we have at the bank is to have every single consumer representing a single customer segment, and that's what you can achieve with the latest technology in CRM. Mobility is clearly another paradigm. Banks are not becoming shops for products. Banks, with the time, are disappearing from the consumer's day-to-day operation and become like the invisible concierge, if you will. You know, you want something, you don't see the bank, but the bank does it for you. And on the other side of the balancing act is the responsibility both of the consumer and of the credit organization for whatever we do together with the consumer. So the first point is capturing the consumer. The second issue in innovation is that you can find lots of interesting and innovative things around, but we really should concentrate, I think, on useful innovation. And the useful innovation is something that allows the bank as the institution grow successfully and achieve healthy margins on one hand, and the innovation should allow the banks make the life of our consumers easier and support the mobility both socially and geographically where our consumer now survives.